You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Wednesday, Fed Day, 12th day of June, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the trading day. We do two every trading day. First broadcast is our live training room. Now that's reserved for members only and those taking the 1 week free trial. If you've not taken your 1 week free trial, just go to mytradingiq.com. At the top of the page, there's a link. It says 5-day free trial, no credit card required. Click the link, complete the registration form properly, and hit submit. In most cases, same day, we'll get your desktop set up, get your indicators indicating, then your trial will begin the following day. Now, you don't have to worry about what day of the week or weekend or hour of the day you sign up for the trial. Once we've got you all set up and ready to go, your trial will start the following day, and you'll get 5 consecutive trading days, even if it stretches over a weekend. So in most cases, the 5-day trial actually becomes a 7-day trial. And there are some markets that do trade over the weekend, so you'll still be able to put the indicators and the strategy to use if you choose to work on a weekend. Okay, but you'll get 5 consecutive trading days, business trading days, no matter what day you sign up. Now, when the live training room ends each day at 11:30 a.m. Eastern, take a 30-minute break and we come back for the afternoon broadcast, this broadcast, which this one is open to the public. Everybody everywhere on planet Earth with an internet-connected device. There's a couple different ways to join this afternoon broadcast live. The best way, you only have to do this once. Go to mytradingiq.com, scroll down to where it says afternoon broadcast, click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before this broadcast starts. That email has a link in it. So at 12 noon Eastern, all you have to do is click the link in the email, and it will automatically log you into our platform. The benefit there is you have access to the question box so that you can ask questions and participate in the discussion. Of course, there will be days when you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy, can't join live, but want to get caught up later. You can do both of those via our YouTube channel. Now, it's very easy to remember our YouTube channel, youtube.com/CFRN. You already have the YouTube part memorized, so all you got to remember is CFRN. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there are over 2,500 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week. Thanks to the power of YouTube, you can scroll back 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all, but just pick some days at random. Doesn't matter which one. Watch a little bit, fast forward a little bit, watch some more, go to a different day, do the same thing. You'll discover the thread of connectivity, the thread of continuity that's woven through each and every daily broadcast. youtube.com/CFRN. Now we got a couple minute late start, but we will jump into our daily devotional, our daily prayer. Then I got a couple of news articles to share with you. Then we'll do a recap of the alerts. Then Michael will join us about 12:45, do a recap of today's live trading room. Then we'll go on the TradingView platform and do some live trading from 1 to 1:30 Eastern. And we'll wrap up with our good word for the day. Now we're going to have to make some major changes to our daily chart when we get there. So make sure you follow along, take notes, and if you miss something, don't worry. An hour after the broadcast ends, it'll be available for you on the YouTube channel. Okay? All right. Now, the topic of the devotion that we're currently in, passion. Today's scriptures, Genesis 1, verses 1 and 2. And I'm sharing from the Message translation. First this, God created the heavens and earth. All you see, all you don't see. Earth was a soup of nothingness, a bottomless emptiness, and inky blackness. God's Spirit brooded like a bird above the watery abyss. Genesis 1, verses 1 and 2. Have you ever truly considered the greatness of creation? What about the greatness of God? Have you ever taken a long drive out into the country, far away from the glow of the city, to find yourself surrounded in empty, open space, away from every point of connection? Have you ever looked up at the expanse of the heavens and found yourself captured by the beauty of life beyond your own? Of how little our own lives feel when presented with such a grand stage of the unexplored before us. If you live out in the country, you get to see it every night. But if you're a city dweller, there are some nights when you can see a few stars in the sky. But get way out in the desert, get way out in the way out, and it's the most incredible light show. And it just goes on and on and on. Now, I know some people subscribe to the Big Bang Theory. Well, in Genesis, it said that God spoke the world into existence. Well, I suspect when he spoke, that made a pretty big noise, or perhaps a big bang. Now, scientists tell us that the universe is ever expanding. But if this crossed my mind yesterday for the first time, really, if you're familiar with the laws of thermodynamics, I think it's the second law that says eventually, if you set something in motion, like a kid's toy, like a little top, a little spinning top, it'll spin and maybe get faster and faster, and then eventually it starts to slow down. I wonder if that's true with the creation of the universe. Scientists say it's still ever expanding, or my question is their technology simply better that they can see farther? But back to the topic at hand. It's a humbling experience to consider something so great. It's the same feeling when we meet someone famous or when we observe a work of great architecture. The greatness of an object or person repositions our view of ourselves even as we look at something else. Certainly the same can be said of the greatness of God. Scripture speaks to the subject to create a sense of wonder and awe in us. There's much more to that greatness that's also explored by the Scriptures. We already shared Genesis 1:1, but in Psalm 139, verse 13, David writes, "For you created my inmost being. You knit me together in my mother's womb." Part of what makes God great is that he is just as much a God of the entire universe as he is the God who has known you intimately from before there was time. He's also faithful, eternal, holy, and any other number of other descriptors we can come up with using our feeble vocabulary. And yet he is infinitely more than any of these characterizations. The God who has been worshipped around the world for thousands of years is the same God we worship today. Omnipresent, omnipotent, omniscient, there is no one like him in the universe. The same God who knows what the future holds in store for the nations and keeps the earth from spinning off its axis and sending us to oblivion is also the same God who knows the number of hairs on our head, Luke 12:7, and is always by our side, Hebrews 13:5. Truly he is great and greatly to be praised. Join me in a word of prayer. Heavenly Father, we come before you today in awe and wonder at the majesty of your creation. Lord, we thank you for being the creator of all things, for bringing order out of chaos, and for the beauty and harmony of your creation. We are grateful for the gift of life and the world you have made. Help us to see your hand in all aspects of creation and to appreciate the beauty around us. May your Spirit continue to hover over us, bringing light into our darkness and order into our lives. Guide us to steward your creation wisely and live in harmony with all that you have made. It's in Jesus' name we believe and pray. And everybody said, amen. Amen, and happy Wednesday. Let me give you the numbers from around the world. We start here in the U.S. with the cash markets, or the indices as they're called. Right now the Dow's up 85 points. The NASDAQ is up 303 points, 1.75%. S&P 500 is up 59, make it 60 points. That's a little over 1%. And the Russell 2000 is up 54 points. That's over 2.5%. Now you might be wondering, what happened? Well, we've been talking about it all week. The CPI numbers that came out this morning, there were 3 high-impact CPI reports. All of them came out better than expected. And look how the market reacted. Now don't forget, at 2 p.m. Eastern, Jerome Powell, or the Fed, will release the interest rate statement, which says keep them the same, raise them, cut them. Consensus is they'll stay the same. And then the real volatility, that's going to create volatility, whatever it is. But at 2:30, that's when the press conference starts. Jerome will deliver the prepared speech. Then he will take questions from the audience. And that's when it can get really volatile, because all those reporters are going to be asking, when will you cut the rates? Now, I've heard suggestions that the cooler than expected CPI print this morning could actually cause him to cut the rates today. So I won't rule it out, but I'm not going to anticipate it. If it happens, that's a great thing. If it doesn't, well, I'm not disappointed. In the commodity basket, crude oil up 36 cents, trading 78.26 last. Gold up $24.90, trading 23.51 last. That's a gain of over 1%. And look at silver, up 94 cents, trading 30.17 last. That's a gain of 3.25%. Now, when the price of silver moves $1, that's worth $5,000 per contract traded. And again, we're up 93 cents. Yeah. In the Asian markets at the close, the Nikkei dropped 258 points. Shanghai rose 9. The Hang Seng dropped 238. And that's a little over 1.25%. In the European markets at the close, FTSE up 67, almost 1%. The DAX up 260, almost 1.5%. And the CAC up 75, almost 1%. So we had a mixed day in Asia. It was a green day for the UK. And so far, it is a big green Radio Wednesday Fed day here in the US of A. Keep in mind, whatever Jerome says today can send the markets even higher, or traders, institutional traders, could choose to take profits, and then it'll look like the bottom fell out. Typically with these kinds of things, now today's an unusual day because we have not only those 3 CPI reports and the Fed, but we're at all-time historic highs. And so a lot of institutional traders may choose to take profit. And that, again, may make it look like the bottom's falling out. But often when you have an economic report that moves the market by such a huge magnitude, when the dust settles, price will often, if not the same day, the following day, be back at the same place it was before the reports came out. So keep that in mind. All right, let's go to Logic 247. That's our 24/7 around the clock E-mini alert service. Now, Valerie did the recap this morning at 6:30 a.m. Eastern. We're in week 306. Over the last 306 weeks, we've issued over 16,900 individual handcrafted alerts. And we've averaged 20% or less of the alerts being stopped out based on market structure, and a very simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now, I've put out additional alerts since Valerie did the recap, so she will do another recap this afternoon and possibly another one this evening. But at the time she did the recap, we had issued 37 alerts this week. That's since the market opened Sunday night. One never triggered. Still waiting on the outcome of 9, plus the ones I put out today. So that gave us 27 actionable alerts, of which 3 or 11% would have been stopped out, again based on market structure, And that very simple process we teach all of our passport holders in their one-on-one mentoring sessions. So far, had a very nice week. Last week we ended up with 7% stopped out, and the week before it was actually 0% stopped out. I haven't had time to see if that's the only time that's happened in the last 306 weeks, but it might have happened one other time. So anyway, long before we had Logic 247, that's more than 306 weeks ago, we had our concierge trade alerts, the original alert service. Now, with the Logic alerts, you get an entry price and an initial target. That's enough to help you get your goal for the day. Then you have additional targets and a final trade to target. Where do those entries and targets come from? From me reading the chart, and in doing so, teaching you how to read the chart. When an alert comes out, you just draw a horizontal line at the entry on your chart, 30-minute. All alerts are created on a 30-minute chart. And draw a horizontal line at the initial target, then the second, third, fourth, fifth target, however many there are. And if you'll repeat that process every day for a couple weeks, pretty soon, you'll be able to do the Logic alerts yourself. Okay? There's no secret, there's no crystal ball. It's simply learning how to read. When you were a child, you had to learn how to read. Jack and Jill is probably where most of us started. And then as you grew older and became more reading proficient, who knows what you're reading today? Maybe you're reading Shakespeare. But you've got to learn how to read the chart, and that's what the Logic alerts are designed to help you do. Then the next step up the ladder is the concierge trade alerts, okay, CTAs. Whereas the Logic alerts can come out anytime around the clock, 2 a.m. or 2 p.m., because futures trade around the clock and we have traders around the globe. The CTAs, on the other hand, are published as a static report each evening shortly after the Globex open. So everybody knows we're in the Wednesday session right now, but the Wednesday session began last night at 6 p.m. Eastern. That's when the markets opened for those who trade futures. First thing you want to do when this report comes out is go to the 30-minute chart of the markets you actually trade and make a note where price is at the time the report was published. It'll always be between these two numbers. Then draw a line in the sand at the long target, a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. BBC stands for bull bear cross. It's the green line you see on all my charts. And the principle is the same whether you put it on a daily, weekly, monthly, 30-minute, 5-minute, tick chart, range chart. If price gets above the green line, you expect higher prices. If price gets below the green line, you expect lower prices. Always relative to whatever time frame you're looking at. Okay? If you're looking for a huge trade, you don't look at a 7-tick range chart for a huge trade. You look at a daily, a weekly, a monthly, right? If you're just getting your goal for the day, you look at a 30-minute as a roadmap to tell you which direction to trade in, and then use the 7-tick range to actually execute the trade and get your goal for the day. Now, with the CTAs, this is where you start looking left yourself to spot potential obstacles or targets. Remember, the Logic alerts have multiple targets. You'll learn to look left just like I learned to look left. Okay? And you'll learn how price behaves at a weekly trading zone. Price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon, if price is above the 30-minute BBC, it's trying to get to the zone above. Price is below the 30-minute BBC, it's trying to get to the zone below. The zones are published Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. Published the zones since December 14th, 2009. Closing in on 15 years. Once you understand how price behaves at and around a weekly zone, those zones will become one of the most important tools in your trading toolbox. Just resist the urge to make it more complicated. As long as you know which way the wind is blowing, it's pretty simple to reach your goal today. So last night, all of our members and trial members had these targets 25 minutes after the open. And remember, all alerts, logic, and CTAs are created on the 30-minute chart. Now we have some work to do on the daily chart. Okay? Why? Remember I said if we hit the 100% fib extension, I was going to shake things up a little bit. Okay? So let me explain. You should look at the daily chart of whatever you trade for 2 minutes before you begin your trading session. Institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has to do with account size. They're the ones who actually move price because of their account size and the size they trade in. So by looking at the daily chart, you're literally looking over the shoulders of the deep pockets who move price. Well, I don't think you wanted to be selling this market. I wouldn't even recommend selling it now. But because we've got the Fed coming, and then we'll probably see higher prices, we'll see lower prices, and all of that. Now, doesn't matter what futures market you trade or what stock you trade, what crypto, Forex, ETF, price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. That cycle's been in place since the inception of the markets. It will remain in place until the markets cease to exist. Our strategy and indicators are not designed to outsmart the institutions with all their infinite resources, but to help you understand what they're doing and why, so you can do the same thing long enough to get your goal for the day, and then have the discipline to put the mouse away. Now, we've been tracking with our fibs all the way back to the October 27th low to the recent all-time historic high, which we really blew out today, and we hit the 100% fib extension. So we are going to now, as I've said we would do. Now, you might want to jot these numbers down because they'll still be important. I'll read them out. 5386, 5111, 4940, 4802, 4664. And then this bullish cross down here at about 4411. But we've been with that set of fibs long enough. And we've been with this set of fib extensions long enough. It's time now to focus on the last leg up. But we're going to make that a little easier to see. Open it up. Go. Drag that back over. So we're going to grab our fib tool. We're going to go to this swing low and connect it to the new all-time historic high today, which was 54.53.5. There's 54.53. About as close as you can get it on a daily chart. So these are the fib retracements. Okay, 24% retracement, the 38, the 50, the 62. Okay, so let's get these up here where I can see them. Okay, so these are the fib retracements. Might be able to get that in a little tighter. Overshoot it? Oh, that's about right. Okay, so these are the fib retracements. So in other words, as price drops, these are areas where we would expect the market to find support. 24, the 38, the 50, the 62. And right here would be a 100% retracement of the last leg up. And look at how this bullish cross, that's when the blue line gets above the green line, lines right up with the 62. Now, when we have a bullish cross that leads to an extended move, first time price revisits that area will almost always be good support. And right now, that bullish cross is setting right at the 62% fib retracement. Now, because this is a new all-time historic high, we need to project into the future using the same 14th century Fibonacci math. And the way we're going to do that is we're going to connect this low to this high, and then we're going to connect this to the retracement low. I get them pretty close? Yeah. Keep in mind, fibs are an area, even though they print an exact price point on your chart, it's an area, okay? All right. So, on the way up, based off of this low to this high to this low, we're almost, with the new high today, almost to the 62% extension. When we get to the 100% extension, if we do, or when we do, then I will make this the low instead of this. And we'll do fibs again. Okay? So we're focusing on the last leg up, but those numbers I gave you earlier, they're still important. Now notice, price always reverts to the mean. In our case, the mean is green. We call it the BBC. Bullish above, bearish below, whatever time frame you put it on. The pullback holds more often than it doesn't, but eventually it will trade through and start building legs to the downside. And then price retraces to the BBC, the pullback holds. But we come down to blue and climbing, which is bullish, and that takes us back above the BBC. So we've had a leg and a retracement. Both of these candles are touching that green line, so the pullback held. We got above red and falling, we had a leg, a retracement, and now we're enjoying another leg. Okay? If you will make it part of your daily routine, every day, spend 2 minutes with the daily chart of whatever you trade. Look over the shoulder of the deep pockets, the ones who actually move price. Then drop to your smaller time frames, 30-minute roadmap, 7-tick execution. All right. The vertical line on the 30-minute chart separates today, Wednesday, from Tuesday, from Monday. We've been talking all week about the CPI number today, whether it was a cool print or a hot print, would create great volatility. And I would say that's great volatility. Here's where we opened last night. And we basically just traded sideways. Then we dropped to the BBC and the pullback held. And it held. We hit the long target, of course. And then the CPI cooler print came out. And bang, leg retracement, leg retracement. Now, because the step line, the black step line has crossed blue and climbing, what we expect now is a retracement back to the BBC. Will it get there before the Fed announcement? I don't know. But on a normal day, under normal conditions, once that step line crosses from the left side to the right side, for a retracement to the BBC. When the step line crosses red and falling, this is the CFMA1. I call it red and falling, blue and climbing. One is bearish, the other bullish. When the step line crosses red and falling, we expect to pull back to the BBC as well. There was never any reason to think about trading to the short target because, number one, we would have had to get through this zone, then get through the BBC. Then we would trade down to this zone, and if we got through the zone and that bullish cross right there, then we would engage down to the short target. Okay. On the Dow. Now, when price rallies up to a zone, we expect resistance till proven otherwise. When price drops to a zone, we expect support till proven otherwise. When price encounters a zone, 70% of the time you're going to have consolidation. 20% of the time rejection. 10% of the time the slice. Now, because of the CPI numbers today, we actually punched through this zone. But once we ran out of steam, the step line crossed, blue and climbing. Blue and climbing has now become red and falling. And look where the price is on the Dow. Almost exactly where it was when those CPI numbers came out. Remember I said that earlier, when the dust settles? Now we're going to have another fireworks show this afternoon at 2 and again at 2:30. Fed and the Fed price conference at 2:30. On the Russell, here's where we opened last night. Above the BBC, we pull back to the BBC, the pullback held, all those candles are still touching it. Red and falling turned to blue and climbing. Off we go, we hit the target. And then the 8:30 econ report came out. We took off, got a leg, a retracement, a leg. Now, the step line has crossed blue and climbing, so we anticipate price to retrace to the BBC. Question is, will there be enough time for it to do what it normally does before the Fed stirs things up again? We shall see. And now, there was no reason to consider trading to the short target since the market opened last night. Remember, it was 25 minutes into the life of this candle that the targets came out. We would have needed to get below this bullish cross right here. We need to get below that to engage and trade down to the target. And of course, the zone is right above it. Okay. But there was no reason, and price never got below the BBC. We spiked below it, but you see they're still touching. As long as they're touching, what you need is a candle that opens and closes below the BBC to indicate a change in direction. Okay. All right, NQ. Here's where we opened last night. Price was trapped, support here and here, with resistance here. Finally, price overcame red and falling, which turned red and falling to blue and climbing. Bang, we hit the target. And then we retraced. Then the news came out. And that took us all the way up to the highest weekly zone for the week on the NQ. Notice the step line has crossed from the left side of blue and climbing to the right side. So under normal market conditions, price will retrace to the BBC. Then you're patient to wait and see if it holds or not. Remember, it holds more often than it doesn't. But you don't want to jump the gun. You're patient. And when it's obvious that it's holding, then you go long. If it doesn't hold, then you're going short. Okay. And again, no reason to ever think about the short target because we never got below the BBC. As long as price is above the 30-minute BBC, the green line, we're only thinking long. It's when price gets below the 30-minute BBC that we think short. And see how price dropped to the zone and found support, 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 support. We spiked it, but we were still touching it. And that gave us a leg, a retracement, a leg, right up to the zone, resistance, retracement, then a leg, retracement, leg, retracement, leg. That's how price moves. Rarely does price move in a straight line. Here's where we opened on crude last night. Now this is the highest weekly zone for crude. We hit it on Monday. But by close of business on Friday, we expect to be at it or below it. So we opened and consolidated along the zone for a few hours, then just ran right up to the target. Then we continued even higher. If you go look left, you'll figure out why price stopped here. And then we got a drop. Oh, this was when the inventories came out, 10:30. Okay. And that sent us down to the zone, which was resistance yesterday. It became support today. Now, what do we expect from here? Well, we're below the BBC and we're running into red and falling. So I suspect that price will head lower. At least down about 77.95. And potentially more. You need to get below this low before you trade to the short target. Now this candle, because it was coming off a zone, I mean, there was room. This candle opened at 78.24 and it dropped 77.88. It's over $300 per contract traded. But probably not a trade I would take because I'd be looking to the left and expecting potential support right there. And price spiked that area, but it closed right there, right at that low. Next candle opened right at that price. Now, if price overcomes the BBC in red and falling, then we could trade long up to this high. Trade every market exactly the same because price flows the same across all markets and all time frames. This is gold. We just went sideways all night. And then at 8 o'clock, we got a little bit of a move. And then here comes the CPI news. And it took us right to the target at 23.58. Now just this candle right here opened at 23.53. That one little green candle, that's worth $500 per contract traded. Once you earn the right to trade 10 contracts, that would be a $5,000 candle. But you don't start trading 10 contracts, you start out in your demo account, in your simulator, okay? You need to put together, per the 2420 blueprint, which you receive when you become a member. That's going to help you write your business plan, your trading plan, and it's going to explain that you need to put together 10 consecutive days in a row, your demo account, where you reach your goal in 10 trades or less before you even think about going live. Once you go live, your goal is to increase your account balance by $2,000. Once you do that, Blueprint will give you the green light to add a second contract. Big difference between the first and second contract is the first contract is funded with your startup capital, the money you put in your account. But the second contract and every contract after is funded with profit you earned in the market. Okay, Michael is here, so I'll finish this up a little later. Right now, he's going to give us a recap of what happened in the live training room this morning, and then we'll go live on TradingView for 30 minutes, and then I'll come back and wrap things up. How'd it go with the fiber optic guy?
Good. They had, I mean, like, I told you they had a whole different idea than I had. I said I wanted a new thing, and he didn't realize it. You know, he was going to try to bring me another extender, and I said, I've already got an extender. I don't need one of those. I need a whole new thing, like a second line. And he checked it all out. He's like, well, you know, they got to approve it, and they got to, you know, it's not so much approve it, but they got to, it's not something that he can just splice into it. You know, with fiber optic, it's, you know, it's something you got to plan ahead. It's not like Spectrum where they have like 6 of them outside on this pole, and you can just go out there and add another wire.
Right.
So he said he's going to talk to them about it, and he'll get back to me. But he should be able to put one right in here, and it'd be a lot easier to do than the other one that they have in the house. That I have in the house. the other one that's like the far end of the house, and I'd be able to be wired direct all the time here, and that would be awesome. And so hopefully we'll be able to get that done maybe this week.
Well, good. Did you get a Windows update last night?
I did not. I did not on any of the computers, and I've been on all of them today.
Huh. Because the one that I use for monitoring YouTube, I turn the monitor off. It's always running, but I turn the monitor off at the end of each day's broadcast. And when I turned it on just now, it updated last night, but everything just came right back. What's new in Chrome? Well, I won't worry about that. I'm sure all of you will get this update pretty soon.
Yeah, we'll probably all get it eventually. I might have rebooted recently because I did have to reboot the other day and so it might have updated when I did that reboot. And I just realized I had a recording going on another computer since yesterday, so that's gonna be a big file.
Okay, well, I'll let you get to it.
All right, here we go. Good afternoon, everyone. Today is Wednesday, right? Wednesday, the 12th day of June, 2024. So, if you have not taken a free trial, let's go here to mytradingiq.com, click on the purple button right here, and that will bring you to this page, this one that's coming up right now. Bring you to this page. Now, on this page, all that we ask for is your name, your email, your phone number, all that stuff. And down here at the bottom, if you have a Ninja Trader, give us your machine ID. Don't give us your Ninja Trader ID, give us the machine ID. And if you have TradingView, give us your login ID, not your email address, your login ID. A lot of times I can derive what your login ID is from your email address, but not always. So you got to make sure you give us the email address. All right. The spreadsheet today. We had quite a few trades, but most of them were at the beginning of the session. They're just getting the goal. We did 13 trades this morning, just getting the goal. But If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 12th day of June 2024. We're -6 on the NQ, another negative day. So far this month, we are equal with the negative and positive days on the NQ. I mean, we're positive $620 per contract on the NQ, but that's unusual to have that many negative days. I mean, last month we only had 1, 2, 3 all month, and this month so far we have 4 so far. So the markets are acting a little strange. Well, the NQ market's acting a little strange anyway. Not getting as much follow through. We did make up for it with the YM though. You know, normally we don't have as much with the YM. This month, right now with the YM, I think I had my YM and Russell backwards here, but with the YM, we're at 15.15 last month, and so far this month we are at 650. So we're even better on the YM. The Russell we're up more than we normally are too. So it's all good. We're spreading it around. Anyway, we're -6 on the NQ, +11 on the Russell, +52 on the YM this morning, +8 on the ES. It took me a while to get the goal for the day because I stopped out on my first couple of trades. One was the ES, it was -10, and one was the NQ, I was -20. It took a little while to come back to that, but we did. On the day, we ended with $385 per contract in the morning session. It took 21 minutes and 13 trades today to get to $1,980, and I took a total of 22 trades this morning. So on the month now, I'm $2,707 over 8 trading days, averaging $338 per contract per 2-hour trading day. On the year, I'm at $43,197. So over 110 trading days, averaging $392 per contract per 2-hour trading day. So if you follow the 24/20 blueprint and you quit trading when you get your goal every day and did it just like I did, so far this year, you would have started with 1 contract, like Dwayne was just saying. Started with 1 contract and worked your way up to 6 by getting $2,000 profit per contract. You should get that one time a month at least. You should get up to $2,000 in profit. And so if you had 1 contract a month so far this year, you'd be averaging $1,283 per hour. Now, I started out with 13 contracts this month because I started with 1 contract in January of 2023. And I had 1 contract per month all of last year, and I'm doing it again this year. So I'm at 18 contracts now. We are 2 months away from finishing the 24/20 blueprint to get to 20 contracts over 24 months. Now, I'll have it done in 20 months, but to get to the next contract this month, we're on 18 contracts. So I have to have $36,000 is what I need to get. That shouldn't be an issue. Last month I had 53. The month before that I had 49. The month before that I had 39. As a matter of fact, I haven't been under $36,000 all year. So it shouldn't be an issue. We're halfway through the month and we're halfway to where we need to be. There is a holiday this month, isn't there? Don't we have Juneteenth this month? I don't know when that happens, but I believe that is a holiday. Anyway, I don't know if it's a holiday where the markets are closed though. Either way, we had to work 39 hours to get our goal for the day so far this year. All right, getting the goal for the day, we had to work 39 hours this year, and we're averaging $6,157 per hour. And that's it. All right, that is the spreadsheet. Now, let's get into the trades that we did take. I don't know why I have so many things going here, but we'll start with this one. I think this is one I was using all morning. You can see up here the targets, they're only given, well, this is only given a couple, but this is only given 1 target on the long side. That means the last blue arrow was a long arrow, and there's only 1 pivot above that last blue arrow. Okay. Over here, you can see this is what it's working off of right here. This blue arrow right here, and it's easily got 5 targets below that. Anyway, let's get into it all. Okay, let's just get right into it. We'll get here all the way back to the beginning on the YM. Okay, this was today that I used on the YM. All right, back here in the beginning. The first trade on the YM was right here. We picked up 17 ticks on that. And we got 3 there to get us to 20. Then we got 22 there to get us to 42. And then we had a break even. And then we got 1 there to get us to 43. And then 4 there to get us to 47. A break even. Then 2 more to get us to 49. And a break even, and 3 more to get us to 52. And that's where we ended. With YM, though, we still had a whole other hours. I'd be surprised if I didn't take any other trades in there. But I did go into a lot of detail this morning with the about the slingshot in the lesson plan. During the break, let's go back here. My last trade was during the break. We had a blue arrow there going right into the zone. We would have taken a blue arrow there. That would have probably stopped out to the take. A blue arrow here would do it and then back and then some. Okay. That was the YM. On the Russell now. Russell, scroll all the way back to the beginning of the Russell. All right. We didn't have that many trades with the Russell, but they were all early on. Here on the Russell, our first trade on the Russell was right here. We picked up 10 ticks on that. Then we had a break even. There were a couple of blue arrows that happened in there. We had a break even on this one and that one. And we got 1 tick on that to get us to plus 11. Now, in here, I'm not sure why I drew this in here. I think I was drawing a leg length. Oh yeah, I was drawing a leg length, and I was saying we should have a retracement about 50% of that leg length, which should be right here, which would be a great place for it to bounce. And it did, and it was, and that all kind of worked. It didn't put in a higher swing though. So going along with today's lesson plan, you would have noticed that you did not get any follow through on that, and the market was turning around. The leg lengths tell you in real time when the trend is changing. Right here, where it failed to put in a higher swing, you should have noticed right there that the markets could be changing directions right here. And if you did take this long trade right here, after it didn't put in a higher swing, no more trades in that direction. And right here, it starts to change. And then it goes back into a little chop. The outer band's being totally flat like this, you wouldn't want to trade in there at all. You want to wait till you get completely out of the no trade zone and over here get some more trades. I'm sorry, I'm going into a little bit of a lesson plan here, but I don't mean to. You got a blue arrow there that didn't work out. Now the purple arrows, you see the purple arrows are triggering in here. When you have a purple arrow and the outer bands are flat, those don't tend to work out as well most of the time. All right. What the purple arrow is telling you is that the outer band is the right color. You're hitting the ribbon when the black line is in the right color. That's all it's telling you. All right. You don't have to come out of the overbought. You can have it in the no trade zone. If you have some separation in the outer band like this one right here, those are usually a better purple arrow, right? That's sorry, I'm getting a little sidetracked. The ES now, we had a few trades on the ES. The ES was one we had to recover from right here. We stopped out right at the beginning. And then we recovered from it here. We picked up 10 ticks there to get us to 0 because we had minus 10 there, then plus 10 there to get us to 0, then plus 8 more right there. And I was drawing in at the time when this was happening, I drew in this level right here, the price wanted to get up to, and you can see it did get back up there right over here, but we didn't get a trade set up for it. That ended up being a pretty significant area right here. This, I think it was, yeah, 44, 45, I think, 54, 45. Right here, it ended up being a significant area, and price is just kind of parked there right now. Okay, so you guys want to be really careful with FOMC coming out in an hour. You want to be really careful trading in here. Now, we're going to do it again over the next hour, but I just want you all to be careful about that, right? Now, as over the next half hour, not the next hour, over the next half hour. Right, so this was our first trade on the NQ. We stopped out on this. That's why it took so many trades to recover. So first trade was minus 20 on the NQ, then we got a plus 4 on that one. So we're at plus 16. Then we had another plus 4 there to get us to, not plus 16, minus 16. Had a plus 4 there to get us to minus 12, and another plus 4 there to get us to, I'm sorry, a plus 6 to get us to minus 6 right there. And that's where we ended up with the NQ. We started our lesson plan, and look, I got one more break-even trade right there. Sorry. We started the lesson plan. I don't remember taking any more trades, but if we did, they'll be highlighted. That was at a zone. This was going up to the zone. Nope, no more trades for me. And that was it. That was it for the NQ. We ended up with minus 6 ticks on the NQ today. All right. So, yeah, so we're ready to get into the live stream portion of this right now. Let me just open that up so I can see what is going on in there. And I don't see any questions coming in here. And if I pop that open, we'll see if you have any questions in there. I see there are some people watching in there. Okay, so I don't know that we're going to have any trades here, but we'll just sit here and entertain you for half an hour, right? 25 more minutes. We do have a trade starting to set up over here on the YM. We want that to pull back down and test the ribbon. The outer band is separated in blue. That's what you want to see. Over here, we're starting to get the same kind of thing here on the NQ, but we're at a weekly trading zone on the NQ, so you want to be careful with that. All right. Looking at, during the break, those of you guys who do or don't know about this, during the break, there was some really nice trades here. If you put the bias on this, bias is on, okay. Put the bias on, there was some really nice trades that triggered during the break on the ES and on the Russell this morning. Okay, had a couple of nice shorting opportunities in here during the break using the TV trades, and some decent long opportunities right through here. That was during the morning session though. And the Russell is what I was really looking at. I haven't looked at the YM today on the TV trades. It'd be interesting to see what that did. Okay, some really nice trades right here. This is on a 4 range, mind you, it's a 4 range chart. All right, so you can see that there were some pretty nice trades that triggered in here this morning on the 4 range chart. And when the markets are slow, the 4 range is fine. If the markets speed up, you just got to go to a larger time frame. Okay, but when you're using a 4 range chart, your risk is like $25 a trade with the Russell. So your risk is almost negligible, and the gains are usually really good. If you're risking, say you get in this trade right here, you're risking 25. You're looking to gain at least 50. So your risk reward is at least 2 to 1, usually more than that. That is there. Let's go out here a little bit further. And I was looking, the Bitcoin is what I was looking for. That's usually on my 5th one over. 1, 2, 3, 4, 5. It's right here. That's where it is. I don't know why this is on replay, but let's undo the replay on that. And this one right here is what I want to do. Okay, this is Ethereum. And we did have a big leg up today after yesterday's down day. We have a green arrow printing right now. Now, this green arrow is not necessarily printed yet. We got to wait until the day is done. But if the day finishes up here, then it will be a green arrow there. And, the green arrows are pretty good indicators where price is going to go. What the green arrow indicates, what it means is that you have a deep pullback into the ribbon. All right, that's what that means. I don't think I have. Let me just check and see if I have blue arrows ready to go on this. Yeah, I do. Okay, so it's pulled back beyond the blue arrow stage of the ribbon right here. Okay. The black line right here is what it's hitting. The black line is still on the bottom. That's what it indicates. Right, so let's go look at Bitcoin really quick. I'm guessing Bitcoin's probably up today too. I want to look at crypto Bitcoin. It's right here. And Bitcoin is up today. It's having a nice move up today. And that's also got the green arrow. Right. So let's look back here. The last time we had a green arrow. Big beep bappity boop. Sorry. I think that's from Snow White. I'm not sure. Anyway, we anticipate from the green arrow that it's going to continue moving up. Okay, I was figuring this thing was going to drag out a long ways, a month, but we're getting into that month now, so we'll see. We'll see how it all plays out here in the future. Let me minimize this and jump back down to 4 charts and see if we did end up with a trade. Over here, we did not end up with a trade there yet. The Russell's almost in a place where it could have a trade. This is going to get down into the oversold, and this is going to hit the ribbon, right? One or both of those things need to happen. It's got to hit the ribbon for sure. So it could also get into the oversold, but it doesn't have to. It does have to hit the ribbon because we're at a direction change. Same thing with the YM, same thing with the NQ over here. All right. All right. Does anybody have any questions about anything at this juncture? Do you want to see any other symbols? Any other strategies? Let's go look at the larger time frame really quick. I have plenty of time, so we don't even have to look really quick. But let's look at what it's given us, the information that it's given us right now. This is the ES as we wait right now. This is some pretty good information, really. Let me back it up here a little bit and do it this, crunch it up a little bit. Okay. So if we do a little bit of analysis, and we're doing today's Wednesday, so today's leg length day. And if you take the leg length analysis that we do on every Wednesday, you can apply it to the chart as it is right now. Okay, as it is right now. And I can tell you that the next leg up should put us above that weekly trading zone right here, which I believe is the highest weekly trading zone. So if we get any surprise at all this afternoon, then you're looking at a move that big from here. See, it's exceeded that a little bit already. But if we use the low, the current low that we have right here, then you're looking at a move above that weekly trading zone. Using today's leg lengths in that area right there. Okay, now the pullback part of this, if we use this information that it's given us right here for the pullback, we'll start down here at the bottom of this and we'll go to the top of that right there. That's your pullback. So if you apply that to right here, we've already done the pullback part of this. All right, the consolidation and the pullback part, we've already done that. Now, if this thing falls apart, and I expect it's going to do both of these things probably. All right, but if this thing falls apart, this is what we're looking at on the downside. Let's grab this and bring it over here. Okay. Now, I expect it's probably going to do both of these things. So the downside from this is going to be right there, which puts it down at this weekly trading zone. It's funny how it works out just to be right at the zones like that. All right. Now, these zones were created Monday morning at 6:15 a.m., and this is what it looks like to me. I don't know whether it's going to resolve to the upside or the downside. I don't know what's going to happen, but I suspect that we're probably going to hit both of these areas before the day is out. All right. Whatever happens in an hour at 2 o'clock is probably going to be undone at 2:30. Okay, that's what I suspect is going to happen. This is building everything into the market already. So if it comes out as they're expecting, then it's probably going to sell off, and then he's going to talk, and it's going to be all positive, and then it's going to go back up. That's probably what's going to happen. So if you're an option trader, you got to be on top of your game when it comes out and it starts to go whatever direction it's going. When it comes out and it starts to go in that direction, because if it goes up, then he's going to say something to contain it. And if it goes down, he's going to say something to contain it at 2:30, right? Whatever direction it goes in, it's probably going to go in the opposite direction beginning at 2:30. So just a little bit of analysis from a historical perspective. That happens a lot. That's the ES. Now, I didn't look at any of the other markets. Now, the YM is, well, let's just look at the YM. Okay, let's back that out and crunch it up, and we'll do a little bit of analysis, the same type of analysis on the YM, except the YM is already given us more information because it's already retraced 100% of the move from the morning. All right, what we have here is, this is a shoulder, this is a shoulder, this is a head. It's a really ugly head and shoulder pattern. And going into all-time highs with an inverted head and shoulder, ugly inverted head and shoulder pattern. It's set to go up, but if it fails, I think on the upside, let's just use the leg lengths to do the analysis like we should, and like we, I'm not just going to make this up. I'm just going to use what the markets already did. All right, so we got that. It exceeded a little bit. It's done 100% retracement of that move. All right, so the move down is the same. All right, from right here, I'll use this spot right here. The move down will be down below this weekly trading zone right here. Okay. Now, the way that it comes together, I don't know how it's going to come together. The upside on this, I would say, would be 100% move back up to the high of the day. The downside is right here. I don't think it's going to stay sideways. All right. But the downside is here and the upside is here. I don't know what it's going to do when it does do something, but I think one of these areas right here is going to get hit. And if one of those areas gets hit, those of you guys who are option traders, if it drops down to here, the calls are going to be dirt cheap to buy. If it runs up to here, the puts are going to be dirt cheap to buy. All right. Just throwing that out there. You know, you look at that when, they're going to be, there's probably going to be a huge spread between the bid and the ask on every option that you find, but we should be able to get stuff dirt cheap. Anybody that's got, if it drops down to here, anybody that owns any calls is going to be dying to sell them. And if it runs up to here, anybody that owns any puts is going to be dying to sell them. So you have this information ahead of time. Just throwing that out there for you from an option perspective. The way that I think things will probably work out, and that's for the YM. I did the same thing here for the ES. The same thing applies when it comes to options. If it drops down to here, the calls are going to be dirt cheap. If it runs up to here, the puts are going to be dirt cheap. Whatever happens first, the next thing is where you're going to make the money. Okay, don't try to make money on the first move. It's the second move where you're going to be able to make the money. The Russell, if we do the same analysis here on the Russell. Okay, let's bring this up and do the same analysis here. Now the Russell's a little more of a puzzle because of this big move up right here that it didn't retrace. This big move up exceeds the legs that we had in the past, the legs up that we had. I mean, it exceeds it by a lot. So you're going to have to work with other information here, okay, because the leg retracement is just not, it's not going to come into play as well as it did with the other ones. But what I would look for here is more of a fib retracement in this, okay? And if it goes down, I would look for it to do a 50% retracement of today's action, which would bring it down to this weekly trading zone right here. Okay, bring it down to right here. You have a BBC right there, you have a weekly trading zone, and you have the midpoint of today's action if it goes down. And then the reaction off of that, if it goes up, hang on, I don't want to just wing it. I want to show you exactly what I'm thinking. Exactly what the market is giving us, all right? If it goes up, this is what the market is giving us. Now, that would be from whatever movement it has down, all right? So assume your base goes down to here, it drops all the way down here, then it'll go exactly right up to that weekly trading zone. You see the way that worked out? Now, I didn't draw this so it would fit there. It just happened that that fits exactly right. You can't make this stuff up. These zones were created Monday, and this is the way that it looks like the price action has positioned the market to react. Now, I don't know what's going to happen next, but I know that if it happens the way that I'm thinking, and it drops down to here to begin with, those calls are going to be dirt cheap. Or if it goes up here to begin with, those puts are going to be dirt cheap. And then you got all the other movement that it's going to try to do. Right. The NQ. The NQ is a little bit like the Russell, but it's more like the YM, I think, right? The YM was the first one we did, right? Yeah, it's more like the YM. No, I'm sorry, not the YM, the ES. The ES was the first one we did. Yeah, it's more like the ES. And that is run up. The retracement is this area right here, this area right here. This is your run up, this is your run up. So what you're looking at is just like the ES. I'll use the information that the charts give us again. All right, so that was your leg up right there. And this, I'll use this instead. Oops, I didn't mean to do that. Hang on. If anybody has any questions about any of this, if I'm boring with all this analysis, just let me know. I'll do something else. I'm not really interested in placing a lot of trades right now at this point in the day. So I'll just do analysis for you for 20 minutes. This area right here is your retracement area, and it's already done that up here. Okay. So on the upside, oops, I guess we don't really need that anyway. Where was that? Right there. On the upside, it's already done the upside here, all right? But if when the news comes out, it's already done the retracement too. If the news is going to be bullish, it's all the way up here on the NQ. All the way up here. It's never ever land right up there. Though, you know, it's already done this bit of a pullback right here. If the initial news is not good, it's going to be right back down to here, just like the ES. Right, it'll be right back down to this level, right down here. And I'd say the midpoint, no, it might find some support right here at the midpoint between the zones. Let me draw that again. It might find some support at the midpoint between the zones because you're going to have your BBC right there too. All right, it might find some support right here on the way down. But I suspect this is all going to be happening really quickly. The way it's consolidating right here, everybody's on the sidelines right now. When the money starts to come in or go out, it's going to happen fast. And you got to be ready. You know, you got to be ready because if it drops down to here, calls are going to be dirt cheap. If it runs up here, puts are going to be dirt cheap. And between here and here, from 230 to say 245, or between here and here, from 230 to 245, there's a ton of money to be made. Here and here, or 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 here and here. But you got to be ready. And there's going to be a spread, and you know, as always, don't invest money you can't afford to lose, because 90% of people don't make money with options. But that right there is a strategy that I think is going to make money for you today, if you were to play with that strategy a little bit. All right, so we're back in here looking at futures, and we have 8 minutes left. We need to bounce off the ribbon over here. We do have separation here. We did get a green arrow back here. If you had taken the green arrow, it went a little bit into profit. It pulled back down. It didn't put in a higher swing over there, but it did put in the higher swing here. This is a lot of sideways action. I really don't want to trade in here. I'd rather do something else, something more productive. Like give you my analysis on the option strategies. Nope, you think that was productive. All right, so here on the Russell, we had a long opportunity from the TV. The ES is not given any long opportunities in a little while on TV trades. This is all on this time frame. Now, if you go to a little bit larger time frame, we had a shorting opportunity here. This one, enough to get you stopped to break even. Same with that one. This was profit. This was profit. This was profit. This was profit. This was enough to get you stopped to break even. So over the last hour or 2 hours, it looks like there have been plenty of opportunities to take some profit. If you look at this on a daily, I haven't really done that. Let's look at it on a daily. Let's see. The last long trade on the daily was back here on the 3rd of May on the Russell. All right, and on that day, it said to be long at 2069, and from there it ran up to 2132. 2132, 2069, 2132. That's what? 63 points. That's a pretty good day. Gave you some mid-trend. This was a good one, and right here you had a mid-trend trade. And that's all we had for this month. If you go to the, instead of having it on the M contract, if you were to, oops, I don't know what I just did. Make that go away. If you were to go to RTY, and I don't know if you guys know this, but if you go to the 1 exclamation, that's going to be the leading contract. All right, so if you don't know what the current month is, you can just go to the 1 exclamation. That's going to be on the leading contract. You won't be able to trade on a DOM on that. but you at least get the right information for what you should be trading. And so you can go back even further and look at what that's continuous contract. It's a leading continuous contract. Right? And you can see that it was nailing the entries pretty well here with the Russell on a daily chart. And it does it with everything. It's not just the Russell. I'll do NVIDIA again. Now, this is kind of hard for me to look at because I'm so used to it being so high priced. This is, wow, this was a big day yesterday. Started here, ran all the way up there, and then came all the way back down to here. But the last long trade on NVIDIA was back here from a daily perspective, back here at 88.38. And that had a huge run. If you multiply that times 10, multiply all that times 10, from there up, it was like 100% run. But if you look at it today with the $150 price, you would want to look at that on like a 50 range, which is 50 cents a bar, or maybe 100 range, which is $1 a bar. Okay. And you can see today, this is today's information, right? Yep, had some great opportunities today. Well, that one there was really good. This one gave a little bit, and this one gave a little bit. Still working. But again, FOMC is coming out, so you want to be cautious. You want to be cautious with everything that you trade right now. All right, me, I'm just going to walk away, I think. All right. It is now 1:26. Does anybody have any questions? I don't see any questions coming in from anyone right now. Okay, I'm gonna go back over that. My option strategy. I want to see what it's gonna do. Now that I put it out there, let me save my workspace so I can check this out, because I know that I'm gonna want to see how that does react. And that's it, guys. I don't see any questions coming in, but we'll see if we get any trades. We are getting a pullback over here on the YM right now. We're pretty close to getting a trade there. On the NQ, we're also getting a pullback. Pretty close to getting a trade there. So if it happens, we'll take it. If it doesn't happen, well, I'm gonna walk away until about 3 o'clock. Here it is right now on the YM. We're at the ribbon. We've got a low here of 56. If you add 8 to that, you'll be at 64. Right now, it's gone down a little bit further. So we're going to go to low 53, 52. If you add 8, you're looking at 61, 60. Add 8 to the low of the bar. Right, it's still there, so it needs to go up 1 tick. Let me click that, and then that, and that. And it's still not printing on the current bar. And on the last bar. There it goes. All right, so now it's all the way down here at 50. So you'd be buying 58 right now. Now it's starting to get out of where I'm comfortable taking the trade. Okay, so this is one of the things that I've been going over with you guys. You see how deep it's pulled back right here? It'll still give you a green arrow if you get enough close right now and it pulls it out of the oversold. It'll give you a green arrow. But it's pulled back beyond the swing level right here. All right, so this is not the kind of green arrow that I want to take. That's something I've been trying to tell you guys. Just notice when you get a trade. Like over here right now on the NQ, it's pulled back. It hasn't hit the ribbon yet, but it's oversold. You'll get a black arrow on this one if you get an up close and it pulls it out. It's pretty close to the ribbon, so I wouldn't just go on the black arrow. I would let it pull back a little bit. If the black arrow happens, let it pull back a little bit, and you can take it on the pullback from the black arrow. Okay, now it's hit the ribbon. It's going to be a blue arrow, so I would go on the blue arrow. Okay, if that were to happen, I'd go on the blue arrow. I'm not doing anything with the YM, so I'm going to bring that over here. I'll bring the NQ over here. And so the low of this is 27.75. So add 4 to that. This is the NQ, right? Yeah. 27.75. So you'd be looking at 31.75. 31.75. Add 4 points to the bottom of the bar. Right, I guess looks like it's 27.75. So add 4 points to the bottom of the bar, and that's going to be what we want your order waiting. Okay. If this pops up right now and comes out of the oversold, it'll be a blue arrow. even if it doesn't pop out of the oversold, it's still a ribbon trade, so it's still a valid trade. Right? Even now, it's still a valid trade, but you're going to bump this down a little bit. Right? The low of this bar right now is 27. Okay, now it's no guarantee to be a trade, so I'm going to cancel it. Right now, the reason that there's no guarantee is because we've dropped down. We've dropped down and we've hit the black line, and we're oversold. So it has to come out of the oversold to be a trade. And you can see it's not being a trade at all. So the whole thing just fell apart right in front of us. All right. And that's it, guys. With that, I am out of time. We did just get. Well, we did just. Let me show you one thing. Let me show you one thing, though. Go out here. I can go on this one, I guess. This one, this is NVIDIA, but if we go here to the RTYM, and go back to our 4 range, we got a short right here that's in profit.
Nice.
And we do the same thing with the ES here on the 4 range. We got a short right here that's in profit.
Nice again.
So both of those just triggered.
Down
Nice
to
trades.
30 minute, I told everybody, or I showed them before you came on, everything was pulling back to the BBC. I said the question will be is if it gets all the way back to the BBC before the Fed fireworks start.
Yep. On a 30-minute. Let's go look at that one more time. Okay, let me bring up my 30-minute charts. Here we are. So we're back here. The YM.
Oh, we've already traded through the BBC on the YM.
Yep, on the NQ. It's got a long way to go to get down to the BBC.
The step line has crossed, so that's what I was talking about. Will there be enough time for it to drop before the Fed throws fuel on the fire?
Yep.
And it may not.
If I had the black step line on here, you'd have the same thing going right there.
You would.
And here the ES has already done it right there as well.
Yep.
So all these numbers that I showed you here on the downside, they could get hit before the Fed even comes out. And if the Fed does come out and it's down that far, that would change things just a little bit.
Take a look at your Dow real quick, and I'll show you something. I showed those guys.
Yeah. Okay.
See where we're at right now? We're right back where we were
100%
when the CPI news came out. Hover over the 830 candle. So rocket ship, dust settles, boom, right back where we started.
Yep.
That happens a lot, guys, with these econ reports. And we'll get super excited. And yeah, go ahead.
If it does happen, if it does shoot right back up here, when he starts talking, then he's going to try to contain it. Whatever it does, up or down, he's going to try to contain it.
Right.
And he will. So I'm sure he's got a speech prepared either way.
Oh yeah, he's definitely got his prepared speech.
And
then the real volatility is when the reporters start saying, all right, enough gobbledygook. When are you going to cut rates? They're going to pin him to the wall.
Yep.
And that could create huge volatility.
That's why you have all this space in between these two things.
Look at that NQ continuing to drop. That's crazy.
Yeah, I know. Look at the ES is still tanking from that last indication.
Oh, that's ES. I thought it was NQ, sorry.
No, that's ES, but let's look at the NQ. I didn't have the NQ up here. I haven't looked at the NQ on this time frame yet, but the NQ is when it populates. The NQ had a short back here, a short back here, a short back here. Well, since we were watching the short from the ES, it was right here at 1330. We gave that one, then that one, and that one. That's on the NQ. Now, the NQ you can't really do on a 4-tick range, but if you do it on like a 15 range, which we do in the morning, well, they didn't really give any shorts through here yet on a 15 range. On a 7 range, I'm sure it probably triggered.
See what it did on a 5-minute.
Okay.
I've been liking what I see on the 5-minute with different markets.
Here we go. Here's the 5-minute, and it gave a long trade back here that ran up quite a bit. It hasn't done anything yet on the 5-minute on the downside.
Look at that long arrow from 5 a.m. this morning.
Yeah, right here.
Yeah, you had to be very patient, but my goodness, look at the reward side of it.
And the stop on that was down here. Was right here. So your stop would have been down here. Your risk from back there, you can do the replay on that and see what the risk actually was. Everything that it said this morning at 5 a.m. Your stop was 9.75 points, which is nothing on the NQ. It's less than $200.
Yep.
And your, I didn't put the risk reward on, but let's put that on and see what the risk reward is. To this, show risk reward, and the risk reward. The risk reward wasn't really great here because the next target up was right here, I guess. It was showing the risk reward was right up here, I think, or maybe the next target. No, the risk reward, the target one was 64.25. Is that right there? Yeah, it is right here. It was so close, but the next target would have been up here. So if you were to do the analysis on the next target for the risk reward, it would have been a really nice number.
Mm-hmm.
And
stuff.
Yeah, yes, it is definitely good stuff. And you got you in at a great spot this morning, right there, if you're on it. And even here, it got you in at a good spot here. And now you got the red bar on a blue background. So we should have, if I had the alert turned on for this, we would have just gotten a thing that says short coming soon. There's something going off in my headset. It might be saying that right now.
And again, we're anticipating on the 30-minute that the NQ is going to retrace back to the BVC.
I don't have one for the NQ, but I do for the QQQ right here.
Mm-hmm.
That said a possible sell soon, about 5 minutes ago. And the SPY also said the same thing, possible sell soon. So for those of you guys that are trading options on those things, you have all that information. Those were on 5 minute. Both of those alerts were on 5 minutes. All right. So the fireworks going to be fun to watch.
I'm trying to remember what news article it was I was reading this morning that mentioned something about options. Was it? Wasn't it that one? Apple, after making their AI announcements, overtook Microsoft as well as most valuable company. But that's not the one that was talking about options. If anybody in the audience remembers, I'm not finding it. So.
Yeah, I don't remember.
And it didn't stick in my head because I don't trade options. So. Oh, here's one thing I didn't share that I meant to share. You got a minute?
Sure.
Commodity trading house Gerald Group said it paid almost $49 million for 10 that turned out not to be 10. Talk about a bad trade. Gerald Group made a provision of $37.3 million in its 2023 financial accounts after the deal to buy Brazilian 10 went awry, according to a note in its 2022 accounts. The firm has started investigations and engaged parties to assist in recovering the funds. Upon arrival at the final destination and final weigh and assay results, it was discovered that the counterparty failed to fulfill its contractual obligations to deliver 10 concentrate. Bloomberg reported last year that the company was hit by a loss in its 10 book, with several senior executives subsequently leaving the firm. Reuters reported that last June, Gerald Group bought cargoes that were supposed to contain 10 concentrate in Brazil, but turned out to be sand.
Really?
But it's the first time that Gerald Group, one of the largest metals trading houses, has acknowledged the fraud and put a number on the potential loss it faces. Gerald Group didn't respond to requests for a comment. A string of scandals has shaken metal markets and ensnared a number of trading houses and incidents that reveal shortcomings in the oversight of shipments and warehouses. Trafigura is still in court over an alleged $500 million fraud in nickel. While last March, bags of nickel owned by JP Morgan and Chase were found to contain stones. Now, that's not a rumor, guy. That's coming from Bloomberg. So, can you imagine JP Morgan got
JP Morgan
hoodwinked,
buying bags and bags of
bags of,
that they thought were nickel.
That they thought were nickel. Not
$500 million
nickels,
worth.
guys, but raw nickel. Yeah. Anyway. Okay, well, I know you probably got to run. Anything else you want to add about trial or anything?
Yeah, if we haven't taken the free trial, go, where is it? Here it is. Go here to mytradingiq.com, right? click on this purple button right here. There is no credit card required for the trial. Click on the purple button, sign up for that trial. When you do, you're going to be brought to this registration page. On this page, all we ask for is your name, email, phone number. These are little drop-down clicks you just got to do. Down here, if you have NinjaTrader, give us your machine ID. If you have TradingView, give us your login ID. Once you do that, we will be able to get you set up with your indicators indicating on your desktop at the start of your trial. And that's really what you want to be. All right. All right.
That article I just shared reminds me of some of the movies I've seen about drugs where, or even on TV shows, you know, when they get a big shipment in, they always go to like the middle of the stack and pull out a bag and cut it open and put a little bit on the knife blade and snort it. I can only imagine what snorting sand feels like. But,
yeah, I know.
they probably didn't need to snort it. It's obvious when you open the bag that ain't nickel, that's sand.
Yeah.
Wow.
Yeah, I don't even know how they figure that out. But what raw nickel looks like.
Yeah, me either. You know. All right, buddy.
All right.
You want me to take
recap
it back?
of the recap. Yeah.
Recap of the recap of the morning session.
21 minutes, 13 trades, $1,980 this morning. Okay.
Great job.
Thanks. Thank you, guys. Good luck. Stay out of the markets for a little while.
Yep. What he said.
We'll see you later.
All right, we left off on gold. Here's where we opened last night. We just consolidated, and then we got that pop off the CPI. Took us right to the long target. Resistance will always send the market looking for support. Remember, the pullback to the VVC holds more often than not. And then we got another leg. I don't think we quite hit the target on that leg. But if you got in at 23.44, that was $1,400 per contract up to the target. You've earned the right to trade 10 contracts. That would be 14 grand. But as I said earlier, you start out in sim until you learn the strategy. Otherwise, you're just wasting your money because you're just going to blow up another account. And the whole idea is to learn how to trade so you don't blow up another account. Silver. Now, when the price of silver moves $1, that's worth $5,000 per contract traded. So the low of today's session is 29.28. So at 30.28, that's 5 grand. From here to here. From here to here, that's 5 grand per contract traded. Now see how the step line crossed? Price is pulling back to the BBC. Trade every market exactly the same. There was never any reason to try to trade to the short target because we never broke away from the BBC to the downside. Support, 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 support. Booyah. And last but not least, on the euro, here's where we opened last night. We did get below the BBC, but we never really pulled away. We did open and close below it, so this could be one of those. But for the euro, you don't have enough room to run to the zone. You got to expect the zone to be support, and there's not enough room to get your goal for the day. So price gets back above the BBC, got blue and climbing, and off we go to the target. So we hit the target before the news, and then we hit the zone, stalled for a minute, 30 minutes, and then the CPI number sent us through the roof. There's still more zones overhead. 2 more, no, 3 more. But the step line is crossed, so like all the other markets, we expect a retracement back to the BBC. Now the Fed's going, we're going to get the Fed announcement. Let's see, 11, 12. So what are we talking here? 16 minutes. In 16 minutes, please put the mouse away. because all these markets are just going to go bananas. But again, the CPI that sent all the markets higher today, the dust already settled for the Dow, and we're right back where we were when the report came out. That happens more times than you could imagine. If you start watching for it, you'll see it, okay? And you should never believe anything I tell you just because I tell you. You should say, okay, he says this over and over. Let me see if it's really true for me. In doing so, then it won't be just something you heard from some guy on the internet. It will be something that you've actually put to the test and proven to yourself. So instead of it being my knowledge and my theory, it becomes your knowledge and your theory and how you manage your trades. And one last look at our new daily chart, which looks a lot different. If you go look at yesterday's broadcast, over here is the fib extensions, fib retracements. If you look at yesterday's broadcast on YouTube, you'll see what daily chart looked like. But because we hit the 100% fib extension, I said the day that we hit the 100% fib extension, that I would then do fibs on the last leg up on the daily chart and do the fib extensions from here. Now the fib retracements go from this low to this new all-time historic high. Fib extensions, and we need fib extensions right now because, see, normally we just look left to know where to expect resistance when the market's moving higher. But when you put in a new all-time historic high, like if we get above today's high, you look left, there's nothing there. You're in price discovery mode. Price has never been there before. So that's when you really need these fib extensions. It's the same 14th century math used for the fib retracements, but just applied in a different manner. Here with the retrace, most of the 62% fib extension on this. Once we hit the 100, I'll do it all over again. Okay. All right, to become a member, go to mytradingiq.com. You should get an email today if you've been on the trial. If you take advantage of that offer, you'll be able to attend the members only workshop tomorrow night. It's every Thursday night, 8 p.m. Eastern. And when you become a member, of course, you have access to the live training room, 2 hours every trading day. 9 out of 10 traders don't have a living, breathing teacher teaching them 2 hours a day. If they did, these statistics would not be so brutal. Along with the group training every day in an interactive environment, you get one-on-one private mentoring. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Support, resistance, back to support, back to resistance, over and over, again and again. Never-ending cycle, low price. I showed you this yesterday. I'm going to show it to you again today. I don't do this every day, but I know we got some new people out there, so these Logic 247 alerts. Okay. Last week, we issued 56 alerts. 3 got stopped out, 7%. We opened for business Sunday night at 6 p.m. Eastern. Now, it says 3 p.m. here because I'm on Pacific time. Telegram, which if you're going to take the trial, or if you're a member, you got to download Telegram. That's kind of the heartbeat of the whole community. It's free, it's safe, it's secure, there's no ads. Okay. Anyway, the first alert coming out of the gate Sunday night was to short the ES at 53.46. S means sell. Sell 53.46. Your initial target's 53.44. That's enough to give you your goal for the day. And then by looking left, I saw there was potential support here. And by looking left, I saw that there was potential support here. And at the time Valerie did the recap, the low was 53.38 and a quarter. Missed that by 1 tick. Get a short on the Dow, short on the Russell, short on the NQ. I duplicated that one by mistake. When you see the red X, that means it got stopped out. We had a short on the euro. We had a short on 30-year bonds. And then we roll into Monday. All that happened Sunday night, before Wall Street even wakes up for the week. Monday, we had a short on the Dow. B means buy. T means initial target. So we had a long on the Russell, long on the NQ. Still waiting, still waiting. A long on gold. A long on the ES. Stop out on the euro. Long on the NQ. Long on the Dow. Short on the Dow. Long on the Russell. Short on the Russell. Long on crude. Short on silver. Still waiting. Long on gold. This one may have resolved itself. Again, Valerie will issue a new recap this afternoon. Then we roll into June 11th. Short on the ES. Stop out on the Dow. A long on crude. Initial target, go for the day. And then the next target. And then the final trade to target on a long is always the weekly zone above. On a short, it's always the weekly zone below. Still waiting. Long on the NQ. Now this one was buy 19,145 just up to the zone. That's 10 points. That's $200 per contract traded. But it kept going. It ran all the way up to 91.78 and a quarter. That's another $400. Silver still waiting. Russell still waiting. Now, some of these may have resolved themselves today, but Valerie will update it. Long on the Russell. Long on crude. PR means potential resistance, because I've looked left and I've seen a previous swing high that could become resistance. At the time of the recap, price had made it up to 78.98. And the final target, because we're above the highest weekly zone, was 79.30. So 78.40, 79.30. That's 11. That right there is $1,100 per contract traded. Even more if you stayed with it. Still waiting, still waiting, still waiting. And then I think these are all the ones I did today, which Valerie will recap this afternoon. Over the last 306 weeks, we've issued over 16,900 individual handcrafted alerts. And one day in a mentoring session, one of our new members said, "Man, it'd be really great if you could publish those alerts before they actually trigger." And I was speechless. I go, "We do." He goes, "No way." I'm like, "Well, yeah, that's why it's an alert, because you need to get prepared for what's about to happen over the next 30 minutes to a day." He goes, "For real? Those come out before they actually trigger?" And I said, "Well, yeah." He's like, "Oh my, wow." I said, "But don't get hung up on just trading the alerts now. The purpose of the alerts is to help you learn how to trade. So use them as they're intended, okay? Use them as part of the learning process. Don't just depend on them. You know, imagine you traded my alerts for a year, then something happens, life happens, and for whatever reason I was unable to give you the alerts. Then are you any better off than you were a year ago? No. So make hay while the sun shines. Learn how to trade while you have the opportunity. Okay? It's very rare to find a situation like ours where you have around-the-clock support, one-on-one mentoring, group training every day, and we never change what we do and how we do it. Up day, down day, fast day, slow day, doesn't matter. We trade every market exactly the same every single day. Now, that's something I hope you can wrap your head around. To become a member, mytradingiq.com. Questions, call 949-42-EMINI. Email us support@cfrn.net. Don't be one of the 9 out of 10 who doesn't have a teacher. Along with having a teacher, you also get one-on-one private mentoring at no extra charge. Strategy you learn, the indicators you own for life as a passport holder, are fluid across all markets and all time frames. You get the Logic 247 alerts, the concierge trade alerts, weekly zones, everything a trader needs, all under one roof, one low price. And again, if you've been on the trial, you should get an email today with instructions on how to become a member. If you want to know how to become a member, just give us a call, send us an email, and we'll do our very best to help you out. All right, let's go to our good word for the day. How is your giving? 1 Corinthians 16:2. On the first day of every week, each of you is to put aside and save as he may prosper, so that no collections need to be made when I come. Now, that was Paul writing in one of his letters to the church at Corinth. Jesus said in Luke 16:11, if you have not been trustworthy in handling worldly wealth, who will trust you with true riches? In other words, if you're not faithful to him with your finances, he will not trust you with greater blessings. What does it mean to be faithful in your finances? Well, the scripture I just read you, Paul wrote, on the first day of every week, each of you is to put aside and save as he may prosper, so that no collections need to be made when I come. That means 3 things. Number 1, regular giving. Note the words, the first day of every week. Some people think of Monday as the first day of the week. I think, in actuality, Sunday, by many, is considered the first day of the week. I just always thought of Sunday as the end of the week. That's when we go to church. And Monday starts a new week. But in the Jewish faith, Saturday was the Sabbath. Began Friday night at sunset and lasted till Saturday night at sunset, I believe. But I'm no theologian, so anyway. Regular giving, note the first day of every week. This is systematic giving, not sporadic giving. It is not, I feel good today, so I'm going to give to God. If you try that with your mortgage lender, you'll be without a house. You're not supposed to give by impulse, but by a commitment to obey God's word. Which takes us to number 2, planned giving. You should put aside something from what you have earned. If you're married, sit down and discuss it with your partner and decide the amount you feel God wants you to give each week. If you don't plan it, you will not give consistently. And number 3, proportional giving. The amount depends on how much you have put aside. If God blesses you financially, you should prayerfully consider increasing your giving. Bottom line, you are to return to God a percentage of what He enables you to earn. We know that in Malachi, it says 10% off the top. Now, for years, people have asked me, is it 10% of my gross or 10% of my net? My answer has always been the same. Do you want a gross blessing or a net blessing? You decide. Now, 10%, that's considered the first fruits. Hey, God, not that God needs your money. What He needs is your faithfulness. Often we will trust God with every area of our life except our wallet. Don't be touching my wallet, right? So, again, God created the heavens and the earth. He doesn't need your money. However, the church that you attend, without regular giving from their members, and there's no money for, there's a lot of expenses in running a church, especially a big one. I saw Joyce Myers in person. Gosh, it must have been 20 years ago. She said her monthly net was $7 million. Across all her ministries, she needed to have $7 million come in every month just to break even. Now, I mean, she's got programs all over the world, feeding the hungry, clothing the naked. I mean, she's not driving 2 Bentleys. Now, there are some people out there making enormous sums of money off their congregation, and, well, you look at it and you just don't feel right. Now, I believe the laborer is worthy of his wages. Okay? Like the CEO of United Way. He probably makes $1, $2, $3 million a year. Now, you would immediately go, whoa, wait a minute. I'm going to give these people $100 so the CEO can make $3 million a year? Well, okay. This individual has been vetted and has proven his ability to raise money for the organization. So he gets paid proportionally. If you just grab some guy off the street and say, hey, we're going to make you the CEO of United Way, he wouldn't even know what to do. He might, type up some plea, print 1,000 copies, go all over town, taping it up in laundry rooms and, on message boards. You see the difference? So if you attend a church where your pastor earns a good salary, Mark, what's his name? Pastor of Mars Hill. When he quit and moved to Scottsdale, he was earning, I think, $600,000 a year, and the board of directors begged him not to leave. They said, "We'll raise your pay to $700,000 a year." He goes, "No, I have wronged you guys." He was put on 30 days leave because he had insulted elders of the church. And so they begged him to stay on after the 30 days, and he said, "No, I don't feel that I should." So he left Seattle and moved to Phoenix. He has a church there now. I doubt he makes that kind of money now, but who knows? He's written some books and whatnot. $700,000 a year. When he left, there were 13 Mars Hill campuses. Once he officially left, in 30 days, every one of the campuses sold. Now, this is where I have concern when people go to church to see a person rather than to worship God. And I have a friend, and we used to talk spiritually about the things of God. And he was very pro Mark Driscoll. And I was pro Mark Driscoll too, but I said, I'm getting worried about Mark. It's like he's some kind of rock star. And I think people are like worshiping him more than God. He goes, oh, no. That's no way. No. So anyway, he was a great preacher. There is a podcast, The Rise and Fall of Mars Hill. If you know of Mark Driscoll, if you know about Mars Hill, now that's one side of the story. It was published by Christianity Today. I think there's like 10 or 11 episodes. But if you know about Mars Hill, and you know about Mark Driscoll, you know about the big movement, it's well worth listening to. You can find it, I'm sure, wherever you get your podcasts. Now, in Malachi, it says 10% first fruit off the top belongs to God. But then, as God blesses you for your faithfulness, there's the tithe, that's the 10%, and then there's the offering, which is above and beyond the tithe. Now, you might be thinking, yeah, well, I'm not a rich man. Well, in the Bible, that old widow woman who went into the temple and put in like the equivalent of, right, first this rich guy comes in and dumps a big sack of money into the coffer. And then this old woman comes in and drops in like the equivalent of 2 pennies. Jesus turned to his disciples and said, who is God more pleased with? And they all said, well, gee, the guy that gave a ton of money. Jesus said, no. He said, the rich man gave out of his abundance, but that widow gave out of her sustenance. Big difference. All right. That's it for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.